little bit about how the demand
Good
trends are
morning.
panning out for you in key central as well as southern markets. What is it that you're seeing on ground?
Okay, as the cement demand across the country is close to this year, I am expecting it should be around between 7 and 8%. So that is a positive trend. In central India, it should be a little tad better than say 8%, maybe 8.2 or something, 8.5. South demand is good, but the prices are not so good. So on an overall basis, India should be, we can comfortably say around 7%. We can be sure for this financial year should go through.
The pocket which you focus on essentially is the HFC space. You don't get, your business is largely dependent on the growth of the housing segment, penetration of low cost housing. Now given that the real estate prices are in a glut and there is suddenly more inventory and less demand, do you think a company like yours, which is dependent on branded cement and you're supplying to good quality builders, they could witness slowdown?
Okay, when it comes to central India, our maximum volume over 90%, 92% volumes are in central India. In central India, you don't see this in a IHB segment, which is called the individual house builder segment. Here we are seeing a good demand because it is not, it's not on the organized sector, I would say. We are not into a business where, we sell under non-trade business, where non-trade business for us is just about 20%. So our volumes are more into retail segments, I would say. So that is where the IHB segment demand is not seeming to be letting down. Another sector is, when there is a demand from the housing sector, government housing sector, also there is a good demand. There are government tenders which are coming in. So there are some competitors who are supplying to those sectors. Ultimately, their volumes in the trade market will slip. So they will exit these markets and they may go for big tenders and things like that. We do not go for these tenders, and we go mostly for retail selling. As a result, we are not seeing any depression in demand. And again, let me tell you that housing in metro cities, we are not talking about tier 1 cities and things like that. MP, UP, they have all tier 2 and tier 3 cities. Demand in these tier 2 and tier 3 cities are relatively, I would say, better than tier 1. I agree that in tier 1 there is a glut of availability of housing in the builder segment is quite large, but not so in tier 2 and 3.
But you also may be feeling the heat, Jamshed, from input prices. I mean, both petcoke as well as coal costs are going up.
Yes, the costs have gone up because of the dollar. The petcoke price has increased. The coal, domestic coal, is more or less little high, but stable, I would say. Given this, we are able to manage our fuel mix very well. Our teams are geared up to interchange between petcoke, coal, and alternative fuels wherever if there is required. We don't use so much in central India, but our units, Zuari is a part of the organization. So there we use a lot of or petcoke, the other alternative fuels. But all said and done, yes, it does hit us. But part of it we have been able to pass it on to the market.
How much of a margin impact could you see purely because of RMC costs going up?
I'll have to check out because there is an impact, marginal impact is there, but then the market is supportive to that.
We want capacity addition for the cement sector in the next 6 months.
See, annually I would say India will keep adding about 15 million tons on an average, and that's what it will happen this year also. But in central India, where our markets are, we are not seeing any capacity, new capacity coming in this year at least.
So if I go by the maths what you are giving us, you will still have a situation of excess capacity on an all India basis, because if the demand is growing at 6.5 to 7%, which is in line with GDP plus minus 1 or 2%, and if there is a capacity addition of 40 to 50 million ton, so then we could be looking at surplus capacity and no large real surge for cement companies in next 6 months. Is my assumption right?
Sometimes you go wrong in terms of assessing the capacity. One industry has to see the capacity in terms of clinker availability. Okay, if you look at the clinker availability, close to about 330 million tons of clinker is available across the country. That, in case of, if I combine it with a mix of blended cements and various types of cement, then it comes to close to about 400 million tons of cement. Okay, although the capacity, nameplate capacity, we may see that it is about 460, 450, 460 million tons in the country. But in terms of cement availability, it will be close to 400. So one must not go by the assumption that, you know, the nameplate capacity is 450. Actual capacity, one must check, is about 400. And that will go about 15 million tons a year, I would say. On a safe side, we can assume this. But demand, on the demand side, it is about 330 million tons of demand would be there as of now. Of course, the pockets in terms of region imbalances are there. South has the maximum overcapacity, and that's why the pressure on prices remains there.
Okay.